As we saw, U.S. futures have been pointing slightly higher this morning amid some optimism over trade talks between the U.S. and China. The U.S. President, Donald Trump, floating an 80% tariff on China, much lower than the current rate. He says that seems right, quote, seems right. And that's ahead of talks between the Treasury Secretary Scott Bessent and Chinese Vice Premier He Lifeng in Switzerland this weekend. Our guest is optimistic on these trade talks. His team has begun buying back into the market. We're joined by Eddie Ghabour, CEO and co-founder of Key Advisors Wealth Management. Eddie, thanks very much for coming on the show.
Thank you for having me.
You think there is going to be progress? I mean, both sides have indicated they think the tariffs are far too high right now.
Absolutely. In our buying back into the market, we de-risked in the beginning of March the 3rd. And then as we started to have these headline risks due to the tariffs and this market downdraft, we did start buying back in. But we think this is more of a trade because from technicals showing some bullish signs. However, I'm not as optimistic as many others in regards to a deal actually getting done. The market, of course, has responded to the optimism of talks. But to your point, even if the tariffs are 80% or 50%, I don't think China is going to agree to that. And even if they did, there's going to be some major headwinds that the U.S. economy will get with tariffs at levels we've never seen before. So I think you're going to continue to be in this headline-driven market. And my fear going into next week is we've had this optimism and had a really nice week in markets as we've had this bounce. If anything negative comes out of this talks this weekend, that's going to put pressure on the markets next week. And that could be an opportunity to buy as well, too. But everything we're purchasing right now, we said to our clients, is on a short leash in case things go backwards. We love hearing that there's progress, but the market is going to demand and the economy is going to demand actual signatures and deals, because as each day goes by, it is going to hurt growth in the second quarter because, as you're saying, the tariffs are in place right now at unsustainable levels.
Gold trading near record highs, and you guys have a big weighting in it, something like 20%. Why is that?
So we have owned gold all year. Our thought process going into the end of last year as we started pivoting more into a gold position was, number one is on the Treasury side. Bonds have been one of the worst places to be from an asset allocation perspective. And some of our clients want a good percentage of their portfolio in something defensive. And our work showed that we thought gold would drastically outperform the fixed income side and not have a high correlation to the S&P. And I think you're going to see more and more money flow to that because we think that interest rates could potentially still go up on the long end of the curve, which will put pressure on fixed income. The other component is the dollar. The dollar continues to get weak, and with the uncertainty with trade, I think you're going to continue to see gold lead the way. I mean, it's had another amazing start, up over 30% year to date, far beating the S&P, beat the S&P last year. So gold to us is a play that does a couple of things. Not only is it defensive and many times not correlated to the S&P, but it works in a bull and bear market. And I think we're in a new norm of uncertainty, high inflation, and higher interest rates, and that continues to be a screaming buy for gold. So we will keep buying any type of major corrections that we'll see in gold. We had a 6% correction that manifested a couple of weeks ago, and that's why we now are sitting at a 20% position between our gold and gold miners in our client portfolios.
You have a couple of stock ideas for us. To start off with Palantir, that stock has jumped this year, but you see upside. They're very big in defense software, for example.
That's exactly right. And I think the software side on the AI trade are going to continue to lead the way. Palantir, we bought in April on one of the big down days. We bought again post earnings. We had about a 13% drop at the open that day. So we doubled our position there. We're sitting approximately at about a 5% position in our tactical strategies for some of our clients in that name. But that name's going to be very, very volatile. So we're not going to be extremely overweight until we get even more more clarity. But that's a name we would continue to buy anywhere in the $100 range. And if it dips below 100, we would certainly be aggressive in buying, because I think as we get through trade and look into the fourth quarter, you're going to see the names like the AI space and the semiconductors that have gotten beaten up so bad, they will probably lead the way out of this bear market that they've been in.
Thank you very much indeed, Eddie. I really appreciate it. Eddie Ghabour is CEO and co-founder at Key Advisors Wealth Management.